Good morning, it's March 31st, Tuesday, and we're going to be taking a look at Axon Enterprise Incorporated. So, ticker is AAXN, and this is self-defense, electrical self-defense company. So, we got it under aerospace and defense. So, if you want to look at some of the financials, it looks like we got a market capitalization, 4.3 billion. You can look at some of this stuff here. I won't have too much to say about these kind of numbers, but yeah. Well, let's go look at the chart here, okay? I'll let this load up. All right, so it looks like I've drawn one trend line to start with, and we're on a monthly time frame like always. So on the monthly sense, we could say that we have this support line, and we could say that this stock has generally been an uptrending stock throughout its conception. So we got data from about 2001 to the present date, and yeah, it looks like it's quite the trending upward thing. It looked like it had quite the rally here back in 03, 04. That was quite the gain. Let me just take a look at this for curiosity purposes. And yeah, we got an 11x there, so 11,000%, 11.6. I think the best way to think about that is just 11.5 times your money. So if you put in $1,000, you'd have 11,500. So those are the type of investments we were looking for. And then we had a little bit of retracement back, and we continued back up here. So we've already reached all new highs here, and I guess we could theoretically see another one of these bull runs here. Now let's just take a step back and say, what are we looking at here? Electronic defense. I mean, what was the reason that so many people wanted defense during this time frame? If we're going to say that these moves are just generally natural, and there had to be some type of external market force to cause this type of rally. Looking at some of this other stuff, I mean, we could say that we were more in a smooth upward trend for a while, and it looks like we kind of reached the top here, and now we're just kind of hovering here. So the MACD looks a little bit atypical in here, and also looks like we're not quite coming down yet as well. So let's say you got a lot of volume back here. I mean, we had a pretty big surge in some volume, and nothing in this monthly time frame looks too relevant. So we'll just zoom it in, look on a weekly sense here, and see if we can see some other things more applicable. So I'm just going to zoom it out a little bit to give us that sense of the bigger picture. And okay, we'll come back in here a little bit. So looks like we're having a little bit of wave action here. We reached an all-time highs here, and we're just coming down here in the momentum. So it looks like we've had quite the sharp decrease. But that being said, not too horrible. Not too horrible at all. You just get a couple lines and indicators going here. That's what I do, isn't it? We could say that overall volume is decreasing, even if you don't want to use that standpoint. You can use something like this, and you can say volume is decreasing over the years. I mean, what's that mean? Well, we could see a little bit of a move in here. We'll just draw a couple more things here and give us a little bit more of a trajectory of where we should expect some price action to transpire over the next few weeks here. And yeah, it looks like it's kind of a parallel channel. I mean, we might be forming you could say a bear flag and have it come down a little bit. I would expect some downward movement right now. We're still kind of inching down, and looks like the drop here on the squeeze momentum has gotten a little bit less. I mean, these were big changes, and then it just somewhat is starting to flatten out pretty good here. So we'll see what this looks like, but over the last little bit, it looks like we've had some swings into the negative. So I wouldn't assume that Axon is any it's gonna continue to do that too. So right here it had somewhat of the same thing. Well, it kind of flattened out a little bit. For right there, kind of flattened a little bit. I don't know how much significance that is. These look a little bit more choppy. I mean, looking on here, how these indicators faring. I mean, let's just say I like to look at these and just say, I mean, these are each person to their own. Some people use these more than others, and some people less. Some people not at all. But using these indicators as guides to when to enter and exit out of position. So if you're using this, you would exit it out right here. And looks like you would have saved yourself some of this downside action. And then right here, you could have assumed that, well, we got the momentum down here. We got this curling back up. We've had a little bit of retracement back. How much retracement has it been? Looks like we hit that 1.68 range. And voila. Onward. So it looks like these are not too bad historically over the last little bit to enter and exit out. So right now, if we're going to appreciate any of that, we'd be in an exiting out phase right now. If you were going to truly look at this more of a week-to-week kind of swing trade and entering and exiting out, if you're looking just for a long-term hold, I mean, electrical self-defense weapons, probably only going to go up in increasing state of paranoia that we're going to be living in. And I guess we could say a long-term support line would be somewhere around here, 33. That's quite a bit away from, let's say, where we're at right now, 77. Or sorry, $70. And that's just crazy when you look at this. You'd think that that's a lot more than this, right? But $33 and then double that is just within this little time frame. So yeah, on a weekly sense here, I think that we can say I'd expect bearish movement in a weekly sense. On the monthly, you know what, like it's pretty choppy. It's up high. It could come down still more too on the monthly sense. So I'm just saying that's kind of a weird little. I haven't seen that too often. So we're just gonna look at a daily sense here and just like, yeah, now we can see that you can start seeing these moves that looked like nothing are actually a little bit more significant here. And we can say here, it was looking good a few days ago, maybe to ride a little bit of this action up, but as of right now, we've had higher low, higher low, higher low, and then we've kind of broken that. So if that is the case, then could this be coming down a little bit? I'm like looking at the bigger trends, the weekly and the monthly. Let's just look at the weekly one. Yeah, it looks like we could have a little bit more movement to the downside. And the month, we have room to go down. It's not sounding too crazy. The daily looks like we're coming up a little bit here. But you can see it's starting to angle off. If this isn't consistent, it had like a pretty good buyback rally. But yeah, in this daily sense, how steep is this going to be? Are we going to have a little bit of a bounce back here? Are we going to get support, let's say, on the 200-day moving average? Because that's usually a pretty good indicator for, let's say, most stocks. The 200-day moving average on the daily chart, that's important on the daily chart. And you can see that, well, historically, it hasn't moved too far away from it. And you can see periods where we're below might be half decent buying opportunities, and when we're above, you can think maybe it's time to take profits, depending on your individual market strategy. So we just kind of bounced above the 200-day moving average here, and I guess it'd be interesting. I mean, I don't know if you would want to completely base this play off of something like that, but let's just see what some other different moving averages are looking like. So the 13-day here. You can really set these to any. Why am I using these numbers in particular? I mean, it might be just as cliche as that that's what people use. I'm not a mathematician, but I do understand how math does work, right? I mean, so it's like the Fibonacci ratio. So these are the golden ratios that are just they're apparent throughout the universe. Like, and it's kind of funny enough that even within stocks and price action, that numbers and math is still the same. I mean, even with everything else considered, I mean, a lot of times numbers just work out. They don't have any emotions or feelings. They just kind of work out. So in that sense, I mean, people have paved the road to where which moving averages make more sense than others, who created the 12 and 26-day moving average and based the divergence off of that. That's more or less just what this is. It's just the moving average of the 12 and the 26, and then calculating the divergence between the two. There might be a little bit more technical explanation for these things. I won't claim to be an expert on such things, but trying to explain it to someone else makes you realize maybe your own deficiencies in your own perception of what you're actually using. But with the moving averages, yeah, that's what they are. They're averages of all this time frame. So in the last 55 days, that's the general average, and it looks like right here that, I mean, it kind of is nicely hugging it to the downside. I mean, that's where if you can see something that's looking to be applicable, then why not use it, right? So that's where, I mean, if you're looking for more long-term trend entry, I'd probably look at, on a daily sense, probably something like the 200-day, just because it gives you a lot better of an idea of what the average is over a longer period of time. So you're not really going in for the day, the month, whatever it may be, right? If you look at it on a monthly sense, this line's just going to be nowhere near anywhere that you could actually base a trade off of. I don't know why that's there. Let's see, we'll delete that. But so you can really always, it's always nice to take a look at where you are in terms of perspective. Zooming back out. Yeah, here on the weekly, we could say the weekly 200-day moving average is something to be, well, in terms of a bullish sense, you know, once we had our first breakdown of that 200-day moving average, it was tested again once, twice, and then finally one more time. But it's seeming to be something I am starting to connect within my own type of just time spent looking at charts, is that whenever you see the end of the bull run, there usually always is another little rally here. And it's just like a wave that you're thinking, a big wave, and then a little wave, and then a littler wave, and then a consolidation, and then we eventually have a rest and we can start getting more momentum. So then we had, like right here, we could say the psychology of a market cycle. I mean, euphoria, blah, blah, blah. I mean, excitement, joy. Euphoria is right at the top. I mean, disbelief. You know, it's just another dip. You know, denial, anger. You know, I mean, frustration. Exit out of the market. I'm done with this shit forever. And then disbelief. This is just another fake out. You know, then eventually we're like, oh, maybe this is actually real. So it looks like with these kind of cups, you can almost say like they're cups, right? They're not perfectly smooth, but a lot of times you see people say, here, we got a cup and handle, a cup and a handle. You can say that these little patterns can play out in whatever time frame you look at, so sometimes just within a shorter time frame, you can see a cup and handle. You could say, a lot of times, whenever you see it start coming back up, I wouldn't have personally thought that would have been a good entry point, but looks like I'm wrong. But in here, once we have like this consolidation phase, this is where typically I like to start entering into the market. Whenever it starts going sideways here a little bit, sometimes you can start thinking, okay, like right here is another good example. If you could enter in some place right here and set some decently tight margins, you could set it, oh, we got the 200-day weekly moving average right here. I mean, this would have been in my opinion, probably a really good entry point right there. We touched on the 200-day weekly average. We could have assumed that this is a very long-term type of low, and we might not see prices here for a while. We've had this move upwards. We've had some side-to-side action, but generally still moving up. And looks like we've had this kind of come up along with it. So in terms of an entry point, I would probably still hold off a little bit. Now, I'm not really sure about the current state of affairs internally with this company. If they came out with any new information, it's like, yeah, we got the new Taser. It's cheap. Everyone will have it in North America. If you see someone with that mask, say, get the hell away from me. I mean, I'm not really sure if like everyone's gonna be packing Tasers now, but it could be something. I mean, personal safety is definitely going to be something that comes into mind when people get fearful. Why? Because we get into survival mode, and what do we think about? Safety, food, shelter. I mean, that's where our brains start getting hardwired for. So when you know that, yeah, I mean, this one, as long as they don't screw it up, I mean, we'll have to be considering the fact that people will have maybe in general less money to go around to spend on things like personal defense, but in some sense, if you're getting robbed, depends where you are. I mean, in Canada, electrical stuff is within the confines of the law versus in America. I mean, you can still just lock and load, man. So, but in other places of the world like UK and Europe, I know there's a lot more gun bans, so maybe they have a presence there. But yeah, I mean, there's nothing like completely like awe-inspiring of this company for me. Like in terms of like now is the time get in. You'll never see these prices again. It seems like to be somewhere where it's not completely overvalued or undervalued. I mean, sometimes you could like where is this? Is this stock under or overvalued? Well, I could say a fair price value should be around this 200-day moving average. I mean, sometimes when you look at, I think I was just looking at. Another site someone else is looking at, but not that I'm really an expert on this, but this is just like some other thing that you can spend a lot more money looking at this kind of stuff. But in general, I think that there's value to know from looking at this. So it's basically saying that there's over and undervaluation of the stock market at any given time, and if it's the probabilities that it's overvaluated or undervaluated could be basically put into a bell curve. And it should be majoritively the mean, right? You think that it'd have the highest probability to be at the mean, and then there'd be a 14% chance it'd be undervalued and 28% chance very undervalued, and same thing, So more than likely, there should be an average mean price, and we have chances that we have overvaluation and undervaluation. So here is this showing like in terms of recession right there in the years. So you can see like right here, we've basically what is this whole thing saying? When the stocks become overvalued, it supersedes a recession because, well, when we have a recession, it's because we have this huge decrease in the stock value, but it also provides great opportunity to buy in at these deeply undervalued levels. So now it's just a matter of like, well, this doesn't go back and look at something like the Great Depression. So that's just one other thing we got to be mindful of, that sometimes it doesn't really look at the longer period, and you never really know how bad things could get. And this one is kind of just got a particular unusualness to it. No one has seen this kind of stuff happen where they shut down the global economy. What are the ramifications of this in the months and years to come? I mean, is this just going to all go back to normal, or is we going to be in some interesting times ahead? I mean, I'm not Nostradamus by any means, but I think we all have a little bit of a sense of fear in us, and any of this market rally is definitely just the stimulus, right? The stimulus, and when people aren't working and we're still waiting to apply for benefits, it's not like we're all just dumping it into our favorite stocks. I mean, some of us are. I mean, but a lot of times there's debt to be paid right now. So a lot of times people are probably selling a little bit more right now. We're selling our reserves that we to cover our debt, and I would say that, yeah. I mean, I'm just not convinced that it's all over yet. But in the same time, when we're looking at, let's say, this bigger curve right here, I'm not the person that is exiting out of the market forever here. I'm the person that just wanna, I don't know, do I want to just wait till here and time my ass back in here? I mean, the thing is, right now we're in this depression phase, right? And it's just a matter of, okay, where are we here? Are we right here, where we're gonna just kind of have a little bit of a rally back up and things are okay, and then boom, we're gonna hit all new lows. Regardless, I think that the market will return. Things might be a little bit different overall globally in some sense, but when we're looking at this kind of chart here, I'd say that overall it's probably going to be having a move again, like it had this move right here. We're kind of consolidating in here again. I would expect this to kind of form somewhat of a decreasing triangle here, so something like this. And we're gonna start creating like a pivot zone where we're gonna have to have some price action eventually. So you could say something like this, where this momentum is gonna come in here, and if we can go up and down, it's gonna tell us whether we're gonna kind of roll over here a little bit, kind of go down towards these 200-day weekly moving averages. And at that point, this might not be a bad one to have a little bit of money in. I mean, I'd be looking personally for a buy zone probably around the 200-day weekly moving average right here, historically saying, and looking at some of these other factors like the weekly, it looks like we still have a little bit of movement. The monthly is just kind of atypical. The daily shows signs of reversal right here, so we have to take note there, but we can look at the 4-hour and see we're already coming back down. We've already had this little bit of a rally up, so I think that you could look at this one too as a breakout, because it's not crazily overextended. That anytime that we reach above, let's say, this 89.93, this might be an interesting time to, let's say, look at this stock and say, hey, what does this price action look like as it's reached this point? And as long as it's not just like boom, boom, then, well, either way, I mean, this is the zone I'd be looking at this end. You know, we got this kind of underlying support trend from right here. This more of a shorter term, and we got this little resistance. And looking at it this sense, we wouldn't be able to really see. But on the weekly, I could say that, yeah, a good long term kind of entry point. I'd probably want to narrow this up a little bit, and let's say there's going to be a range always, but let's say somewhere between like 51 and 46, 47. That'd be probably, for me, like a rough kind of entry point into this. And yeah, when it touches here and it flies up, it might, like, it looks like a pretty good place to, you can see here we got stuck below it for a decent amount of time though. So you never know, like, how long is it going to stay below. Like, It's a lot of days, man. It's a lot of days. So 4 years or so, so that's where we're above it right now. It did break below here, 2008, like everything else when the market crashed, and we just had probably less money overall to buy these type of things, and we eventually got up and we had a new bull run basically. That's how you could look at. This was more of a smaller one, but yeah, we had hit this, and I don't know if you'd really classify this as a bull run, but this could have the potential to really shoot up because, like I said, it has formed this somewhat of a cup here. And that means that we're ready to reach all-time highs here, and we have, for sure we have. And it's just a matter of, well, is this rally going to be, is this it? Is that 167% going to be all that's here? And just going to use this, sorry. Seems like you can get really, it's like on the ball on here, and then other times you can't find what you're looking for to save your life. And I mean, how can I not find that stupid paintbrush? Okay, here it is. Shoes. Okay, sorry. So yeah, we had this little hike up. Boom, and then we have this bigger channel, so we could look at this kind of thing just as the same, and you never know if we're just going to make another little cup here before we go off in this, or alternatively, I mean, maybe we're still forming this top up here. Maybe we're going to still do that and then form our cup up here. So that got a little bit dirty, so to speak. I mean, I think the point has been made, though. You never really know when's the top of it. I mean, you can look at things like this and say, okay, yeah, the momentum was pretty high here, about 15, 16, 17, 18. What was it like up here during this time frame? I mean, sometimes it's not always the same. 8. So I think it was just newer, more room to grow, less smaller size market cap, more potential for those big expansions and growth. Yeah, but I think I've talked enough about this. I mean, not to give anyone too much of a clear idea what to do, but I would say that this is something that is worth looking into. You could probably time an entry here down lower. I'd probably just wait and looking for better positions or a better time to enter in for a lower cost. It has touched this. I mean, is it going to fall below this 200-day moving average? I mean, well, I don't think we've had such a crazy pump up here, right? So it depends on if this is truly, let's say, the bull market right there, and if we did have a retracement, what numbers could we be thinking of a measured move down? So when we look at this and go to that top there, this is just a way that numbers work sometimes. It looks like we first touched on that 618. We bounced back up, and yeah, we fell right through this. So that's not really a great measuring tool in this particular instance. Yeah, I mean, that's a huge rise right here, though. So I think that was 11 times, yeah. So that's just a big rise. I mean, when you have those kind of rises, expect some type of retracement back. So it ended up going all the way back down, I think, to the 0.7. So it went all the way down and broke it. So it lost a lot of the value it gained. It went all the way up to, what did it go up to? Well, went up to $30 and went back down to 2. So that's quite a big swing there. And that's what can happen when you have huge moves up. You usually have huge moves down. So that's the danger of jumping in when we move all the way up at the top. And yeah, right in here, I would still say it would be nicer to time it at a lower time frame when we're more close to this weekly 200 weekly average, especially in loom of the current economic state. I mean, we could be at the start of like a major recession here, depression, and if that's the case, you never know if you're looking at this kind of long-term, action. But if you're investing around the 200-day moving average right in here, I mean, you'd take much longer to regain your values to up in here. Granted, it's 7 years, but up here, you're looking at a much longer time frame to regain the current value. So investing around this 200-day moving average, you can see where it's a little bit more of a safe bet in terms of long-term expectations. And it looks like we're a little bit away from this right now. And yeah, I wouldn't jump in this head over heels on this stock in particular. But it doesn't look horrible. It doesn't look horrible by any means. There could be some good movement in this one. I mean, I think it always comes down to each person in particular, what their individual rationale is to buying each stock. I mean, if you think that people are just going to be gunslinging tasers on the left and right hip, two apiece, I need my taser before I get my food. Maybe maybe that'll be good for this thing. I could see this though. I mean, if for the countries that do have gun bans and in lieu of like more uncertain times, maybe more self-defense is going to be something. Maybe that's going to be a growing economy when you're just like you don't want to be around people and you're just not trustful of anyone. But yeah, Axon and Axon Enterprise Incorporated, kind of an interesting stock to look at. I mean, one of the few ones that says to buy. I would never listen to these people, but it's just interesting to see that. And yeah, I mean, I guess if you're looking at things for a diversity sense, I mean, this is a pretty good diversification, as it's a self-defense, electrical stuff. I mean, aerospace and defense. So if you add this to your portfolio, I imagine it's going to add a little tint of diversification. And this is a good stock. I mean, in the long term, when you're talking tens of years. So I have no doubt that this. I don't know the fundamentals of this company as much, but this looks like a half decent one in my opinion. So I'm gonna maybe do a video just in general, a little bit more in the future, kind of highlighting a plethora of different stocks and kind of watching them day to day. So instead of doing one by one, I might just like keep, let's say, some of the good ones that we go over and just keep an eye on them, because that's what it takes. And I might have to renew my trading membership so I can get alerts, so I can keep an eye on some of this stuff, because even like looking at a couple stocks a couple days ago, you never really know where they're at. It just takes such a continual look in the market. So yeah, I think that's what I'm going to do. I'm going to kind of get a favorite list and see what makes it, what has a lot of potential, and yeah, kind of be scanning some potential entry points. Anyway, here's Axon Enterprise. Let me know what one you want next. I'll take anyone from anyone. All right, thank you. Have a good day.